Is it better to buy one Tesla call option, such as the January 19th, 2024 $240 strike for $3,170, and assuming you sell and make a profit, you buy Tesla shares with that, or use $3,170 to buy Tesla shares now? I have a decent size. It must be a different one because the other mic doesn't have Tesla, but I have a decent sized bag of Tesla stock. Also, when looking on Delta on options, what is the delta you look for, and what's usually the cutoff for where it makes the trade not worth it anymore? So remember, I told you the questions are getting smarter and smarter every week. This is an example of that. So first of all, for those who don't know what deltas are, the cutoff where I make the trade not worthwhile is definitely above 0.5. So with call options, a delta of 0.5 means that the option price will increase by 50 cents for every dollar increase in the underlying asset price. That's not enough for me. And put options, a delta of minus 0.5 means the options price will decrease by 50 cents for every dollar increase in the underlying asset price. So remember, or fall in price. But the point is, you don't want to be at 0.5. You want to be higher. Let's look at the numbers. So since that question came in, the price of Tesla actually fell on Friday a little bit. I think it's trading right now in aftermarkets $220. It went up $4 or $5 in aftermarkets, but it did fall as low as $215 or less on Friday. Again, the whole market is weak, but because the volatility of Tesla is far greater than other assets, if one asset falls by, say, 5%, Tesla will fall by more than 10%. But the corollary is also true. So here you can see the Tesla 240 calls for January 2024, break-even point $260, because the calls cost $20, give or take a couple of cents. So bid is $19.10. The ask is $19.60. We just call it 20. And the delta you see here is 0.531. You don't want to touch this, okay? It's below our threshold. Second, let's look at a different one. Tesla's January 200s, the break-even point is $238. The cost of this, the bid is $37.65. The ask is $39. Call it $39. But you always take the middle point between the bid and the ask, $38, $39. And that means the break-even point is $238 as I calculated here. And you can see the delta is 0.6758. That's better. But the danger is, remember, the danger is you don't have much time to January 2024. So I like to buy long-term leaps and I sell short-term options, okay? So I like to do the reverse of what I'm telling you to do here. If I'm selling something, I actually want the delta to be low, okay? So let's look at my choice. If I was playing, this would be the Tesla $200 call for January 2025. The delta is 0.71. And the bid is $63. So that means your break even is $62.63. And I do believe by January 2025, Tesla will be trading at least $450. So let me show you the ROI of these different options. I'm getting a lot of options questions in these Q&As. So here, January 2025 target price, $450. And that's sandbag to heck. You're spending $6,300 on a leap, the break-even point $263. Your ROI is 300% or a 4x. And if you buy the shares, you only be able to buy 28 shares, and your ROI would be 12,600 over 6,300, which would be 100% or 2x. So you get a lot more return from a leap option. So that's why I like leaps. So I hope that helps.